The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman on this Friday the 16th of May, mid-month. And what are we looking at? We're looking at the Dow futures up 159 at 42,544. Just a tad to go to the 42,563 level. And 64, and then you start to make a leg E here in the left side, right side price time match, and that has it in this particular instance going to the 19th to get to the high that was made back on the 2nd of April in the futures at 42,836. Very nice. E-mini, let's go to the continuous contract, trading up 20 at 59.63. That is over most of the resistance levels in the 200-period moving average that was made back in March. Doing very nicely. It's way above the green 9-period moving average. 9 is way above the 200-period moving average and the 14-period moving average. The MACD is strong. Stochastics flat at 97%. The on-balance volume, the blue line, the daily chart is a little overbought. And the weekly chart that's got a lot of work to do. The 9-period moving average, we'll see by the end of the day. We're looking to see whether or not that the MACD can cross positive. The stochastic is only at 58%. That's got a long way to go. And I'm a little concerned that the on-balance volume is not performing as well as it should with such a spectacular move from the 4,800 level in the E-mini to where we are at 5,900. I mean, that's a huge move. So got to see this pink 9-period moving average cross positive. It's still a way to go. And the monthly chart is looking very good. Let's go to the NQ, which is the NDX 100 trading vehicle. E-mini, NASDAQ 100 continuous contract, up 83 at 21,483. Now, this has gone to a leg D with a doji candle. If it today it extends over, this is the futures, right? 21,529.75. That extends leg D. If it fails it here, and we've got a report coming up at 8:30, we're going to see what the market does. It's going to be very important. As I said, to subscribe to my opening call. If we can survive over the 8:30 time frame and the Dow is moving plus 90 after 1:30, with options expiration and everything, that should all go well for the close. But there could be a rally failure or even a failure to rally. But we did have in the Chapman Wave methodology, I have a technique that I developed based on Richard Arm's. This is his, why does he call it? Arms index. And I just treat it as the Chapman Wave trend gauge. And if the trend is over a certain level, there's a really good chance that the E-mini futures will rally overnight and into the next morning, which is exactly what it did. And if it was very, very low, which it wasn't, it actually got quite low, but it didn't get very, very low. It means that the Dow, no matter how much the futures are up, the Dow should go negative at some point. Just need a sip of water. I hope that's going to suffice. I'm not supposed to have too much water at this moment. So we've got the NQs up, the RTY, excuse me, this is the Russell 2000 continuous contract, up 13 at 21.14. Hasn't got to the high that was made back on the 12th of May. At 21.39, is that 0.60? Yeah, 0.60, but it's doing quite nicely. And you can see the power of this 200-period moving average where it rallied off it back in August of last year, comes down and goes right through it, but it had to retest to see if there was strength. Boom, comes down again. Big leg A up. So that's the futures. I do want to go to the gold. We've been quite negative on the gold. Although we still have some part of a position that has done really well. Just want to keep it more as an insurance policy right now. But you've got a sell mode in the daily. It's down 63. In the futures at 31,062.7. If in the next 1 or 2 days it takes out the 3,000, closes under 3,100, then you're going to probably get a full H pattern arch formation with a retest of the low that was made back on the 7th of April at a low of 2970.4. But I wouldn't be surprised if they just around here in the 3100 area, you start to see some buying come in just as a kind of insurance, because geopolitically, there's a lot going on that is way, way more peaceful than disruptive. But I think you'll find some kind of support. Look, the 14-period moving average has been hit in the weekly chart, and that's going to be the big test. That's what I'm saying. If it starts to close under 3,100, starts to impact the weekly chart, I might even get a sell signal, but we'll have to wait for that. Meantime, at the silver right now, it's also falling. It's down 59 cents at 32.09. It's held very well, but that 200-period moving average has been support, and it keeps tackling it to try to break under it. If it closes under 31.55, it's at 32.08 right now. That silver contract is going to slide even further. I want to go to high-grade copper, which should be running, but it's not. It's down 0.09 at 4.59. I'm going to go to crude oil. Crude oil is trading, let's see, up 2 cents at 61.17. I just think it's stuck. That's all. I don't see it breaking out. I'm not even sure it's going to break down. It's just stuck. It's a technical term. You look it up in the catalog of terminology in the technical handbook. It'll be under S for stuck. We're looking at the bonds. Bonds right now are trading up quite nicely, up 26.30 seconds. Thank goodness for that. We did that left side, right side. So far, it's a successful test of the arch formation. Right there. Let's go. Arch formation right there. And when so far it's gone to that level, I'm just going to I like to put these fib numbers in every once in a while. Larry seems to use them so fantastically. I find that they do hit their job. Maybe I'm just not measuring them correctly, but the way he measures them, they are fantastic. In the meantime, I prefer Chapman wave notations. So we're looking at the dreaded H pattern, successful so far, but you cannot see a break, even a tag, underneath 114 and 17.30 seconds. Oops, 111 and 17.30 seconds. That's the low of the 9th of April. I want to go to Bitcoin. Bitcoin is up 650. It's just doing quite nicely after a very, very big, wonderful move all the way to the right there. That was up to 106,270. All-time high is 110,975. We've been long, and that's where we've been taking some off. And we've still got a core position, but I'm anticipating that it holds pretty well as a kind of an alternative. I can't even say an alternative, an inclusion to the whole currency area. Look at the dollar, DXY. Look at this dollar pulling back down nine ticks at 100.78. It's just not going anywhere. It has had a quite nice rally from the 98 level up to the 101.80, and now it's at 100.7. 101.80. Now it's 100.79. Just not doing very much. I'll be back in a moment. Basil Chapman, early edition of the Tiger Traditions Hour. It's 8:14 a.m. It'll be 10:14 a.m. when it's replayed later on.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
Hi folks, we're back. So we're looking at the new Mag 7 because there's definitely, the old Mag 7 is just kind of falling apart. So I'm looking at this and I'm saying to myself, wow, this is really exciting. Look what we've got. We've got GE at an all-time high, even as we speak, at 230.60. This is going to be a puzzle for me. I have to work it out over the weekend. For instance, in the weekly chart, well, first of all, it's made a double bottom at 159.60 on the December the 27th, the week of the 27th of 2024, screams up the 215 area, plunges down to 159.46. So it takes out that left side low. In the Chapman wave methodology, that means that any rally from here has to be considered a new rally, or it's part of the sell mode from that peak D. Well, that means that if you go to a new high above that peak D that was made at 214.31 over there, this has to be an A. It can't be an E because you took out that left side low. It's not a continuation pattern. All I can say is, if this is a brand new A in the weekly chart and the Chapman wave methodology, this immediately becomes an up arrow. I have no choice but to make it an up arrow because it took out the previous high. You must expect, not you, I must expect that it's still going to go peak A. That means it has to make a lower high to make a peak. Then it goes to a peak B, a leg B, one penny over whatever peak A is, starts leg B. That leg is a floating letter. It goes B, 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 B until it makes a peak B. Then it becomes a peak B. And the moment it takes out peak B by 1 penny, it goes to legs. That means this goes all the way into, at the earliest, this is leg 1. This I originally called my Chapman wave methodology the 7-wave form when I used to hand chart. And then I found, no, it can actually go higher to an E and F and even higher than that. And so all I can say is from here, leg 1, you've got 7 weeks in which to make a peak D from here. If all of next week does not take out today's high, whatever the high is. Isn't that nice? It doesn't tell you how high. Other techniques do that, but it does say higher highs. I mean, we could go to today could be a high, say 231.10. Next week we pull back, we don't break it, and then the following week we go to 231.30, and then pull back. That's already leg B. So you see what I'm saying? It doesn't tell you the height. Other techniques do. Isn't it amazing? Look at Boeing. Well, of course they've got these incredible orders, etc. They had orders, but now it's been recognized as coming back. So look at this. It's gone to a 50% retracement. right there. And from the 111.02 low that was made back in 2022, screams up to 267.54 back in December 24. Then I don't have to tell you about all the chaos that's been rendered by absolutely horrendous management. All right, it comes all the way back down, has a higher low at 130, just recently made 137.30 to in November, the week of the 15th, arches over, dreaded H, takes out the left side low, but within 1 bar, it goes back way over the low that was made. And this low at 128.88 has already screamed to 206. And pre-market, it's at 207.10, up 86 cents. And that is quite incredible. But it is a leg E, a peak E so far in the daily chart, only an A in the weekly chart, and an A in the monthly chart. So this is different. This is not at all-time highs. This A could actually make an Eiffel Tower, straight up, straight down. But that 200-period moving average of 192.46 should be very strong support on any sudden weakness. All right. So that's what I'm saying. That look at this, dear. So this is the agricultural side, all-time high yesterday. Is trading at 519.30, up 2.98 pre-market. I am impressed. Look at this long-term trend line, up channel, breaks it. I should put in a Chapman wave. There we are. Inside track, propellant zone, make that green. Go click. Make that pink. I'm not sure I know many people who use pink as part of the indicators. So look at this, leg C, look at that, just above the inside track repellent zone. If at any point in the next 6 weeks, I'm going to say 3 weeks, is trading above 555, that's a clear breakout of that uptrend, up channel and uptrend repellent line. It becomes a propellant line. Look at Caterpillar. Moribund, just doing nothing up until April the 7th. All of a sudden, it goes from 269 to 349, up 369 pre-market today, 353. Aha! And look at that. This is a real good example of the Chapman wave instant restart. Look right there. Went to a peak D, and within 3 bars, it's actually 2 bars, makes a higher high. And it goes to E/A, F/B, and then a G/C, which says that there's a really good chance it's going to go to a D above 355.33. We'll see what happens. I mean, look at the technicals. So we've now rotated, and this is what I've been saying since 2009, when we got that buy signal at the exact low, the day of the low, March the 6th. I've been saying in that summer of 2010, when there was this rotation and the market didn't really drop, I said, aha, that's going to be the modus operandi of this market for quite some time. That instead of just plunging, very often we're going to get rotational corrections. So some group that was winning takes a breather, and another, let's say leading, and then another group that was lagging takes over. And that's kind of what we've seen right now. Look, we've got this rotation into the more cyclical, the deep cyclical, in fact, area of the market. Let's see what the SLX is doing. SLX, let's see, I've got to be ready because we're going to have news, economic news. I think it's the the non-farm payroll. Let me just finish this here. Yeah, so this is 1, 2, 3, but it didn't. This was the 4th bar, so that's not an instant restart. This is the XLX. When the SLX, the Van Eck Vector Steel ETF, actually starts to trade decisively above the 200-period moving average, which is at about 50. Let me just get this right. 63.48. When it actually starts to trade for 1 or 2 weeks coming up above 65.30, trying to get to the 66s, I'll be really impressed. Now let's go to the small caps, the IWM, just to show you the chart. It went to the left side, right side price time match at 209.23. It just snuck above it by a tad. That's going to be the big thing. The 200-period moving average is at 209.75. If the IWM in May the rest of May, just tags 214 to 215 once. To me, that'll be really impressive. That'll say, aha, for the first time, you're getting a rotation into the small caps that can be sustained. We've had it before, it wasn't sustainable. That's very important. So we're about to get some news, I'm sure, and we'll be looking at the futures. Let's go to the futures because that's always fun. So that was right there. The futures are up 23 points, the E-mini futures. Made a peak E, pulls back, and now it's going to peak A, B, C. All right, I'll be back in a moment. Basil Chapman, early edition of the Tiger Technicians Hour at 8:26 a.m. And we will be back and tell you what's happened after the economic reading.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
All right, folks, we're back, and we're waiting to see whether the E-mini futures react to whatever the economic news is. There should be economic news, maybe there isn't, but usually on a Friday at this time, there's something that makes the E-mini go whoosh, like that, up and down about 20 points and then stabilize. But all it's done now is done nothing. It's up 24 at 59.57, made a peak C1, C2. Oops, it just snuck over. So there's your D. So there's your D in the 1 minute chart right there. I was hoping, I don't know if it's going to be, I was hoping for some sudden slide today because they're entries that I would like to get into to add to positions for subscribers because we've had some really good positions, but also there are a couple that I would like to have added positions. In some cases, it could even be new positions. All right, so we're now off. Wow, we're up off a whopping 2 points from the high. 2.5. Oh, no. 3.4. Oh, now we're slipping a little bit. Wow, oh, look at that red candle. Yeah, it's nothing, absolutely nothing. If it goes much deeper, that'll be something. So you had a peak D right there in the 1 minute chart. The potential, we don't even know yet, peak F in the 5 minute chart and a potential F in the 10 minute chart. But I'm saying these are still leg F and leg in the 5 and leg F in the 10 until there's a lower high. All right, so there's nothing to see here. Let me just go through the numbers right now. I want to go back, and then we've got a lot to do. So the IWM futures are up $1.34. The pre-market iShares Russell 2000 ETF. That's going to be important because if in this, you see, that's not an instant restart at that peak D. It's at peak D in the Chapman wave that you get instant restarts. It's the only time the low can be the high. I don't want to get into all that, even though it's technical Friday. No, I will. You see this low here at 171.74 on the 9th of April. Everything else on the 7th made it low. That spiked higher. That couldn't be an A. Why? Because you have to make a trough. So when it went to this E, after that you can start counting. So that is not an A. This is an A. That's a B. That's a C. That's a D. That's an E. That's an F. But even though it's not an instant restart, there could also be an alternate count. I'm just thinking that we had such a big move the last couple of days. Just even yesterday, I said we should have to subscribers on Thursday, we should have a little bit of a hiatus, just a little bit of a breather. Wow, we had a whopping breather. It was maybe, an hour and a half or something, and then the market zoomed to the upside, creating a Maribozu candle. Look at this, a Maribozu candle. That's a candle with no wick. Well, a tiny little wick, but I still call it a Maribozu. There's another one there. So, okay, I needed to show you a couple of things. I'm going to take this time because I was asked about various stocks. Now, look at this. So here's GE. You see this green 9-period moving average? Look how fabulous that is. If I put this horizontal, let's get it right here. Where is it? There. A horizontal line, and every one of these, you got some kind of hiccup, right? This is the MACD. Every time it got there. But I use this, INDU, as a benchmark for a lot of indicators. So in the Dow, you can see I've notated every time there was a low in the stochastic underneath this horizontal line, and it turned around, it coincided with a very nice rally. I put 2 up arrows. The down arrow, the red one, is when the MACD started bumping up against this line. Look, the MACD at this particular point has turned down in the daily chart of the Dow, mostly because of UNH, but it hasn't hit that yet. But look at the relative strength. For the first time, the relative strength is extremely, I wouldn't say overbought, but it's extremely high, right at a level that very often says, start being a little bit careful. Look at this right here. So I'm saying that this is a rally that I think goes on a little bit longer, maybe into part of May. Maybe I'm going to be away from the 22nd. That's next Thursday. Be back in the saddle right here on the following Thursday. So I'm anticipating that we're getting very close to its housing starts seem to be no reaction, exactly in line, permits a bit weak, import prices plus 0.1 and plus 0.5 versus the estimates, versus the plus 0.5 estimate. Okay, it's 0.01, so a little bit weaker. Tariffs starting to show up. They will show up for sure. But there are other things that could ameliorate that. But I'm suspecting, this is my outlook, I'm anticipating that we haven't quite finished the up move right now. But three things are important. One is, I think that Trump is going to use up all his negotiation, tariffs, whatever it is, peace, etc., over the next week or so. And then I think the market's going to take a breather. That's number one. Number two is, if you just look at the charts, and I'm looking at this and I'm saying, look how close we are to where you usually get some kind of a pullback. That's the Dow. Let's just go to even the winners. So GE is a winner. Let's go to, let's go to Deere. I haven't even looked at this on this particular. Look, Deere still has a way to go in the MACD, but the stochastic it's got a little double top, but it's not anywhere close to where other serious turns have occurred. So it's still looking very good. So I'm not going to do that with all of them. But what I want you to say is that in the rotation, even in a sector that has been very weak, but you've got some stocks that have held well. For instance, in the whole Mag 7, Microsoft has held very well. But that's all it's done. It's held very well. It's had a very nice big move up in the from the earnings report, going from 344.79 back in April, around the 7th or so. It starts this big move, and it's held very. But those candles are really struggling candles. Those candles are the kind of candles that say, very nice, but where's the power? So yes, it's gone above the Chapman Wave Inside Track repellent zone. It's become a propellant zone in the weekly chart. So I'm just saying it's not leading. It's not at all-time highs. So if you go to Apple, Apple, look. Apple's just stuck in the lower range. Hits 260 up in the December, plunges to the 160s, 100-point down, and now it's still only at 200. Nothing. Amazon is a little bit better in the sense that it's had a much better rally since the 7th. It's gone from the 160-ish area up to 205 right now. It made that peak D, and now from the doji candle, it's pulling back. I think there's a lot of tiredness here, and that just says to me, we've got AIQ. This is a really good thing to look at. Look, the AIQs, the Global X Artificial Intelligence. Look at this monthly chart. Look at that wick going from the 42 area, plunges down to 30.60 on the 7th, and it's come back from 30 to 40. That's 10 points. It's a 32% gain. Hey, that's much. Look at that candle. That's really good. So it's very selective out here. I'll be back. Basil Chapman, Tiger News Hour. A lot to discuss in the next segment because I want to go through requests, stocks, and we will look at the GDX, etc. I'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
So I just wanted to show you, this is a technique that I developed a long time ago, and it's actually the technique that's kept us in our trades for this long. I mean, it really helps a lot. Look at this. This is gold. This is a continuous contract, and we're looking at gold back. What was this? 4 o'clock was that yesterday? 4 o'clock on the 15th, right? 4 o'clock in the afternoon. And was that 4 o'clock in the afternoon? 4:10 in the morning. 4:10 in the morning, right? So look what it does. It goes all the way. I'm not going to count the peaks or troughs or anything like that. I'm just going to show you one technique. This shows you that you could have bought here and sold here. What are the prices? So let's say the price, let's see, you've got your signal. Let's go to the very next bar. Let's go to the high of that bar, 3154.7. Let's call it 3154, 3,154. And you get your signal to sell. Let's get the worst possible one. 32.32. I would say that's a pretty nice profit, right? And look at the magnificence of this 200-period moving average. You break out, and then it becomes support, a propellant, and it pushes you up. You come back, you tag it, and you try to rally, and you keep coming back, but you're rallying. Look, peak A, peak B, peak C, peak D. No, that was C1, C2, and it goes to D and plunges. Now it's testing it again, and it can't hold, and it pulls back, and it goes back and says, I gotta try. Oh, I failed. Boom. And then gold goes down sharply, down to the 31, the low is 31.56, right? And now it's trading at 31.81, trying to rally again. Look at the E-mini, ESM25. It's a bumpier ride, and I love this. At 4 o'clock on a 4 o'clock at the closing bell, very often you will get the low of a narrow move that goes all night in a really tight range. This is exactly what happened. Look here. This is at 3:30. Okay, it wasn't 4 o'clock. 3:30. That was the low. That low in the E-mini of 59.17. Remember, this is Technical Friday, so we can do some technical stuff here. A little lesson. This low of 59.17.50 wasn't taken out, and yet you went in a trading area 57, right? It goes to 59.41. So that's it's about a 25 point. This is nothing for the E-mini. 25 points all night. It gets stuck. I remember notating this and saying, "Aha, this is going to be all night. I bet I wake up in the morning and it's going to either be the same." But if this is the rule of the narrow rectangle, if it went to a peak D or E above this trend line, and then slipped halfway into the narrow rectangle, there's a really good chance it's not only going to take out the low, this low right here, but it's going to go even lower and then try to come back. If for any reason it goes for a number of bars, not just one, but maybe 3 to 5 bars, doesn't matter what time frame you're looking at, in this case 10-minute chart, above this resistance line, you can have a rally that holds all the way for quite a while before it comes back. And that's exactly what we've got. We're now down 16. I mean, we're up 16, down from the high of the day in the E-mini of 59.58. We're at 59.49. Not a big deal, 9 points down. Wait a minute. We haven't broken down yet, but we've got that peak F, and we've got the MACD turning down. Stochastics now at 50%, but that green 9-period moving average, until it goes pink, it's still looking very good. Isn't that interesting, huh? You can do it with anything. I don't want to waste time right now. Just wanted to go through that. Now, normally what I do is I take the high of that and I find a doji little mini candle shows a weakness in this, whatever you're following. Therefore, that could be a midpoint, and that would have been right there, would have been a midpoint to the breakout, which tested the high that was made back at 1:30 yesterday afternoon, Eastern time of 59.44.50. All right, so we've done a little bit of that. Technical Friday. I wanted to get into the technicals. Now, this is going to be very interesting. The Dow is still up 128. But as I'm looking at this, let me just go back here. Okay. So I was talking about the AIQ. This is the AI Global Artificial Intelligence ETF. That's been a bellwether for me. It's been saying, look, it was written off as, 5-6 years' time, but money is flowing into this. Not enough to go to an all-time high. I've got that all-time high potential of 42.78 being tested by the 23rd of May. Could be wrong. This is a Chapman wave inside wedge target repellent line. So as long as we've got what's leading continue to lead, I think that's really important. So the question came in about the GDX. So the GDX trading, remember I drew this chart, left side, right side price, time match said that by the 16th, what's today? Today's the 15th. 15th. No, today's the 16th. By the 16th, there could be a test of this low right here, the low of 45.16. So far, we're 45.45 down $1.04. But this is the pattern we looked at, the dreaded H pattern going to another large H pattern fading. And within 3 bars, it hasn't yet closed above that low right there. So this is saying that making lower lows and lower highs, very simple technique, says that at least in this particular time frame, that's a sell mode. And that's the goal, the GDX market vectors. But wait a minute. I wonder if I've got it here. HUI.X. Oh, I don't know if I do. No. Have I got the XAU? Yes, I do. XAU. Okay, XAU. There it is. So the XAU is doing the same thing. So this has gone to a peak D in the weekly, a leg E. Probably it's going to be a peak E, but we don't know. Just under 200 in the monthly. And this one had this big spiral to the upside to an F/A. I'm saying right now this is almost certainly an F right here because it didn't take out the starting point right there. So this is everything about it suggests that we've got an F with a down arrow. So the question is, this is a problem. One of the things I have in the over all the years, the decades that I've done this, do I put a down arrow here when it's just like a single move up to the upside to a new high? Because that did, the 9-period moving average went negative. It went all the way to the beautiful 200-period moving average springboard and then rallied, and now it's starting to fail. Well, what I do there is let me just get rid of this here. I mean, 1 second, let me just do this. So what I tend to do is I put the down arrow because that's my technique. It says, look, everything failed. If it goes to a higher high, you just have to deal with it. If it's like a single move up, then you can get, I do this as a subordinate. In this case, the caret or the inverted V says that's really a sell signal as well. So that's what I'm looking at. So the XAU, which is the gold and silver sector index, is making lower lows and lower highs. It has made this dreaded H pattern. That's this pattern here where it comes down sharply, tries to rally, fails at a peak A or B, takes out the left side low. There's your 1, that's a peak A failure. There's a peak A failure. Here's a peak AB failure. we'll see if there's going to be a little mini peak A failure as well in the XAU. I'll be right back. Basil Chapman, Tiger Technicians Hour.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Hi folks, and you can see how I like to go one step at a time. Look, the 1 minute chart, let me just move this over here. The 1 minute chart gave a sell signal at that peak D when it broke and the 9-period moving average went negative. It went right through the 200-period moving average. It hung around it because that's the power of the 200-period. Now it's a repellent zone, right? Look at this peak F. I didn't put that arrow in until it went pink. Now I can put the arrow in, down arrow. I have to wait. Look, the 10 minutes. So think of this not as 1 5-minute, 10 minutes, but daily, weekly, monthly. It's the same principle. So that says I'm looking at this as a potential. If that's going to be the case, maybe we'll watch that in gold. The day's already in sell mode. The weekly might, by the end of the day, give a sell signal. We'll see what happens. But this is the principle. And you can see what's going on here. Look, you've had this powerful move in the 5-minute chart from about 6:10, 6:15. And it goes up, it goes to a peak F, pulls back, and now all the technicals are weak. But there's a flat stochastic at 7%. All right, so we're about to wrap it up. For his morning market kickoff, fabulous show. Check out my opening call, my daily newsletter. We've had some really good positions in this. And here's another thing. I'm doing my video this afternoon. I'm hoping this afternoon or early tomorrow morning. But that video is like it's for subscribers only. It's like a webinar because I go through it as I did now with education about the technique, what we're looking at, why we're looking at, going through all our positions, why we want to add to some, why we've taken little bits off others as money management, that sort of thing. So it's informative. It's only for subscribers. It's every week. I'm not sure next week I'm going to be able to do it at all. I'll be away, but I will try to do it if possible. But I do it almost every week. Friday afternoon after the close, I do this market overview for my subscribers. And one of the things about it is that I answer some of the questions that I get during the week, and I look at certain stocks that are very important in terms of sometimes they're just important for the market to get a sense of the market. You don't have to be in it or out of it or anything. You're just looking at it. So that's part of the subscribers' benefits for my opening call newsletter. Have a wonderful weekend, everyone, and I will see you on Monday. Stay tuned for great programming, and have a great day.